Hi there, hello and welcome to Charles Kelly Money Tips, bringing you money tips to help you save, earn, invest, accumulate and enjoy more money. Today is a traditional Friday sort of weekly roundup of the financial news this week. Not all the financial news, but the news that perhaps pertains to people that are looking for money tips in general and looking for ways of improving their financial situation and earning more money, accumulating more money, and perhaps being able to enjoy more money in terms of their money mindset. So hello to anyone who's tuned in on Facebook Live. Thanks for tuning in. I really appreciate this, and I appreciate some of your comments. And also to my podcast listeners on either iTunes, Stitcher, or at my website moneytipsdaily.com. So this week in the UK has been quite a traumatic week and a week of turmoil in politics. Boris Johnson, the Prime Minister, eventually got his Brexit deal agreed, but the opposition parties have managed to throw a spanner in the works and will basically delay Brexit further because they said Parliament needs more time to scrutinise the bill, even though they've had 3 years to sort of scrutinise most of it anyway. That they've managed to delay things. Well, that's Parliament. And probably you might be wondering, if you live in another country, why Boris Johnson can't just get this through. I mean, after all, he is the Prime Minister and he's supposed to be the First Minister of the ruling party in the country. Well, the fact is, Boris Johnson's party, the Conservative Party, does not have a majority in Parliament. Okay, you need a majority in Parliament to get things through. It's not a dictatorship. He can't just say, right, that's it, we're going to do this, and lock up his opposition party members. He's actually got a minus majority because he sacked some of his own MPs recently. It's part of a plot. He wants to call an election because I think Boris feels that he can win an election. The Labour Party is weak, so he's called for an election. But the opposition Labour Party, the main opposition, has said no, we don't want an election right now. They're sort of playing it a bit coy because I think they realise they might lose the election, so they're making all sorts of excuses to not go for an election. So that's why the Brexit deal has not been pushed through, and it looks like we're not going to leave on the 31st of October. So the markets are not happy about this. The pound is not happy about this, and the pound has slid again. And business is not happy that we'll still have this uncertainty around the markets because when there's uncertainty in the market, when there's uncertainty in a country, businesses and companies are less likely to invest in the UK or invest in new projects, new products, etc. because they don't know what's happening next. They don't know if we're going to stay in the European Union or leave the European Union. They don't know whether there will be a general election this side of Christmas or what. So, and if there is a general election, do we end up with another hung parliament and a coalition government, or do we end up with maybe a surprise? We could end up with Jeremy Corbyn and he could bring in a socialist agenda, taking us back to the 1970s. So who knows what's going to happen? That's why there's a bit of uncertainty, and that's obviously created uncertainty in the property market. And I've been in London this week talking to estate agents, and the London market has been in the doldrums for a couple of years. Prices have fallen. They were talking about properties that would sell for £800,000 only a couple of years ago, and now they're accepting offers of £650,000. But I think vendors have got to the stage where they can't drop any further, so there's not as much property around on the market because people are just not selling, or they're sitting on their hands waiting for things to turn around. Perhaps they're waiting for Brexit to be done because they can see a bit of light at the end of the tunnel, so that's why they're not selling. So that's what I've seen and found talking to agents this week. And talking of property market, the housing, this is from the London Evening Standard, it said that the housing market in general and people in the housing market are not happy that the November budget has been axed. They were hoping to see some changes to stamp duty. Stamp duty is crazy at the moment. It's so high that people buying a property could pay as much as £25,000 in stamp duty, which is just a tax. It's called stamp duty because it used to be a stamp, and literally the duty would be stamped on deeds or title registers, and it used to be 1% and that sort of rate, which is fair enough. Now it can be 5%, 8%. It's got to ridiculous stages now, and I think that the property market and house builders want the Chancellor to do something about this and reduce stamp duty and do other things to stimulate the property market, because frankly builders are sitting now on developments that why would they want to release them when they're not sure they can sell them. When I was a councillor for many years, I was on the planning committee, and lots of companies were coming in and getting planning permission, but they're not building out, not even starting on the project, because if they've got planning permission, they can sit on that planning permission for 3 years or more in some cases, and or they can sort of keep it ticking over, but not build. Sometimes they start the build, start digging the foundations, but don't actually finish the building, and that enables them to hold things out for longer. So, and they're doing this. You can't blame them for doing this, because if they feel that they're not going to sell the properties, why would they go out and build a load of flats and a load of houses when they might be not able to sell them? I saw a guy last week that has got a small development and he can't sell the properties, so he's now renting them out to renters to just hold on to them for another year or two until he can get the price he wants. He's not desperate, but there are some people out there who are getting a bit desperate. So that's what's been happening in general. And this week I also reported on various stories. On my articles on moneytipsdaily.com, you can find articles about the Brexit effect, whether you should invest or wait. And I think, to summarise there, some people can't wait. If they need to move because of their personal situation, or they need somewhere to live, they just sometimes can't wait. So they have to sell what they've got and buy, or just buy and sort of sit there for the long term. Don't forget, property investment is a long-term investment. It's not something to make a quick buck. So, if you have to buy, you got to buy. Some people feel that the market might go down if we come out of the EU, because there'll be a recession. The country will fall into turmoil, going off a cliff edge, as people say. But then they said that when we didn't join the euro. They said if we don't join the euro, it will be a disaster. They said when the referendum came out, it would be a disaster, but it hasn't really been a disaster. Britain will carry on, and the UK will always be a good place to invest. And property over the long term does tend to go up. It tends to double about every 10 years, unless you're in certain parts of the country where things just stay stagnant. But in good parts of the country, property does go up, and has been going up for about 1,000 years. So that's a pretty good time scale to market on. So yeah, if you have to invest or you have to move somewhere to live, then people are just doing it. And don't forget, your home shouldn't be just considered as an investment. It is a place to live. So some people are just doing that. They're just getting on with it. I also said that the UK population, in another article this week, would hit 70 million in 10 years' time. These are projections and forecasts, and by the ONS, the Office for National Statistics, to show that the UK population will rise above 70 million by 2029. And that's not long. That's 10 years away. And there'll be another 3.5 million people, mostly coming in from international migration. So there's clearly going to be a demand for property there, right? If more people are coming into the country, they'll need somewhere to live. And, the government said that it needs to build 200,000 new homes a year. Not literally the government building, but the government allowing builders to build. They're not building many social homes at the moment. So, 200,000 homes a year over the next 10 years would be 2 million. If they reach that, they're not really reaching that target every year. So let's say they build 1.8 million over 10 years. Well, that's only half the amount of homes, and double the amount of people will be coming in from that figure. So clearly the 200,000 homes they need to build only copes with the population now, because there is a shortage. So how are they going to cope with 3.5 million people, new or 3.5 million population growth in the next 10 years. So there you go. That means to me that there will still be a demand for property. Then I did another article this week. Should banks control our spending? That's also on iTunes and Stitcher. It's looking at whether banks should be holding people to account, saying, well, why are you spending all this money? Have a look at that yourself. I think people should be responsible for their own money, but a charity has said that there are some people who have obsessive compulsive disorders, maybe shopping disorders, I don't know, and the bank should monitor large amounts of withdrawals from their account. Well, in fact, they already do that in most cases, the banks, if you need to withdraw a lot of money at one stage. But, they can't stop you using your cards and your credit cards and your ATM and drawing money out of the machine. Yesterday I talked about making, or the day before yesterday, we talked about making saving more fun, and I gave you 5 tips to make saving more interesting and fun. Check that out on iTunes and Stitcher. And yesterday we talked about how to use creative property financing techniques to literally beat the banks. And this is because the banks have tightened up on their lending. The Bank of England said you must tighten up on your lending, so they've made it more difficult to get mortgages. In the past, I could get mortgages very easily for buy-to-lets, 85%, almost no questions asked. You could get further advances very easily, but it's not so easy now. So it's become like on the slow road where things are moving slowly because sometimes you can't raise the finance, sometimes the banks are saying no, or we know you want 75%, but we're only going to give you 65% because you own a lot of properties already. And if you own a lot of properties, then you're not safe, are you? Oh, aren't you? I thought people who owned a lot of properties and have a lot of rental income were safer than a first-time buyer. But no, they'll give the first-time buyer the money more easily than somebody with a lot of properties or someone with a large property portfolio. They consider them as a greater risk than someone just buying one. That doesn't make sense, does it? It's just like if you've got income from property, they don't think that is as safe as having income from a job. Because this is the way they think. They think in boxes. Oh, that's a job. I've got pay slips there. Yes, that's good. We'll lend on that. But property income? Oh, no, that's not safe. We won't lend so much on that. We like the guy that's got a regular job. Even though the guy with the regular job could lose it tomorrow. Anything can happen. So there you go. That's the way the banks think. So to beat the banks, sometimes you've got to be more creative and look at different ways of raising finance. And that's why I've mentioned that a company I deal with, and I've been on many of their courses, have put on a course which was really meant for people, for existing customers of theirs, for existing course holders, existing graduates of courses. And they put on a course called a 2-day Creative Finance Masterclass, which was, as I said, exclusive for people who attended previous courses, but they've got a few spare tickets. Now, yesterday they only had about 11. I don't know how many they got today. But if you'd like to register for this course, it's in the UK, 14th and 15th of November. And if you want to register for the course, just send me a message on Facebook Messenger or email me at charles@charleskelly.net. And in this 2-day masterclass, which is free, by the way, because it was meant for people that had been on previous courses, you can learn about crowdfunding, you can learn about raising finance other than through the banks, rent to build cash flow, to build a cash flow business fast, and that's a big market, and a lot of people are getting into that. Financing new developments, joint venturing, how to find investors, how to structure deals to make it more attractive for investors, and doing your due diligence, how to get yourself a file together so that you can approach lenders. If you know how to put together a package to make yourself look more attractive, not dressing things up, but how to put a file together, how to put a proposal together. You can learn that. You can learn how to liberate money from your pension scheme, your SAS or your SIP, and much, much more. And obviously, you need to take your own financial advice on this, but this will give you a very good overview on using other people's money. You'll also learn a bit more about lease options and rent to buy and finding rent to buy tenants, all sorts of things. Really interesting stuff. I found it fascinating myself. Why are they doing it free? Well, they obviously want to get bums on seats, and if people are interested in going in more deeply into any of those methods, then you can pay to go on further courses. So the idea is they get you there, they can give you an overview, which is very, very useful. but they've got a ready-made customer base maybe who might want to go on to do other courses, but there's no obligation to do so. So if you're in the UK middle of November, I would strongly suggest you look at this 2-day masterclass, which is free, and I've got a handful now of complimentary tickets. So just give me a shout on this on Facebook Messenger, or send me an email to charles@charleskelly.net. You won't regret it, and it could open up a whole new world, because the traditional method of raising money is to save for a deposit and then get a mortgage and buy a property. But if a property now is costing £200,000 and you save £50,000 and get a mortgage of £150,000, which is 75%, you might be able to do that once. You might be able to do it twice. You might be able to do it 3 times. But then what? And the income from 2 or 3 properties may not be enough to make you financially free, or to enable you to get out of the rat race and quit your job. So this is what a lot of investors find. They end up with 2 or 3 properties and then run out of cash. So this masterclass will show you how you can buy multiple properties and build up a multiple property portfolio of several million pounds worth of property using other people's money, but using none of your own money. There are lots of strategies. So think about this masterclass and how to use none of your own money to build up a property portfolio. So that's all for now. I hope you have a great weekend ahead, and I will speak to you again on Monday. This has been Charles Kelly, bringing you money tips to help you save, earn, invest, accumulate and enjoy more money. So just finally, for those on Facebook, thanks for tuning in on Facebook Live. Hope to see you again, maybe over the weekend, if I manage to do another broadcast. But do think about that course. And obviously it doesn't help if you're overseas, but if you're in the UK and you'd like to do this course, I strongly suggest you go on this complimentary. I've got a few complimentary tickets left now, maybe I think less than half a dozen now. So be quick before they run out. Just send me a message and get on that free masterclass to show you how to buy property and build up a multiple property portfolio using none of your own money. It is possible. Keep an open mind on this. Even if you're already an investor, keep an open mind on these techniques. So get in touch with me. Do it now.